killing two birds in one stone. I'm going to put this up on both channels in case you're a follower. I don't want to do this often, but I just feel I want to on this particular occasion, just a few moments. So this is the Dow. And I'm also going to run past Bitcoin. Why? Well, the key thing is we have a method and a methodology and a mindset. We're equity traders, FX traders, and crypto traders. And understanding the larger markets and the liquidity flows when there's larger liquidity contractions, which of course banks, central bankers are invariably the controllers. They suck the juice out of the system when you need it most. And they proliferate it when they need to reinflate assets. And there is a knock-on effect. And the key thing that you might be asking, what does BTC, say, let's talk Bitcoin, got to do with, say, a long-standing Dow Jones index? The key thing is humanity and people's reactions to fear of missing out and fear of loss. That is exactly what it has. And as much as we want a particular asset to be inversely correlated, if they're all contained by the same people that are all getting a beating simultaneously in a liquidity contraction, people will dash to cash. And that is the Pavlovian response. So while I want to be a fanboy for decentralized money, assuming the control structure hasn't already got that one by the scruff of the neck, any amount of things might have occurred. The crypto might have been, in essence, a creation for libertarians to be fooled by the dark state. Despite all of this, the Dow did not do well on yesterday. So let's show you why I say so and why we are likely, in my view, on balance of probabilities. So I am not a clairvoyant and I don't claim to see the future. Beware anyone who tells you they know and this is definitely going to happen. These are people that are totally bought into their confirmation bias. Amazing things can happen that can startle anybody. But on balance of probabilities, last time we dipped this far down and capitulated, we had a gap up and a reasonably strong rally that failed just at our first interim. Then we came very, very hard back down. In literally a single candle, we undid the gap, and 4 previous upside candles, we undid 70-80% of it. And since then we've churned. So note the electric fence reaction on our second interim that saw it spike out of there with a gap is just the same element of rejection has not occurred. You've had a sustained period. Yes, there was some long tails on the bottom there, a desire to be buying it up. And I thought we might get a rally. In fact, I drew this a couple of days ago. It's still on there. But actually it didn't materialize. You've got hammer, 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 and that final candle of the day, which is an H3. It's an unusual time break that I've cracked this chart into, but it's all still the same data. Oh, listen to the thunder, foreboding. Anyway, so potential rally, but it's actually stymied. You didn't get that immediate reaction this time. So that is showing a weakness, and our overall view for the equity indices is that you will get continuation to the downside, and nothing since I last said that, with these 4 or 5 candles since formed, has changed that view. So let's scurry on to Bitcoin. So we are all wishing and hoping, and I'm afraid that doesn't cover it. It's not about what you wish or you hope for. It's what you see and what happens. And that's the pragmatic value of methodology and understanding. We all would like something that is counter-cyclical to the central banker controlled scheme and cartel. Unfortunately, whether it's the futures or whether it was, and there's lots of popular theories going on about that, the truth of the matter is the footsteps in the sand will tell you. They gave it a ramp potentially, and since then they've got accumulated enough of the stock to potentially leverage it up and sell it off short. That's how the theory goes. We don't know for sure. I'm sometimes a little bit circumspect. If there's a wall of buying, there's a wall of buying. It can hurt short sellers. Everybody has a margin call, even the central bank would. But you might argue they can print money up, but that still has to go through the QE system. So over here, where you might have suspected, I said there's a possibility you might get rally. I'm not interested in it. The bias is to the short side. In actual fact, you've got a pump up and then a sell-off, and then another attempt, and then actually the selling over one. This is once again the case of swimming upstream. Invariably, when you take a breath and you rest, you go backwards. In other words, swimming with the tide, and in this case, analogy for trend, is to the downside. Upside targets were generated and failed. You might have had a left shoulder ahead and a very small right shoulder here with a neckline here. Nowhere near to getting there. We draw all patterns we see in all directions. And only the small HVF made its target, then it died. It ran the HVF funnel, which was bearish, weak rally with a rising wedge, and since then down through the funnel, through that funnel with momentum, return, move to that funnel, failure to get above it. Each time failing, grind line, and the grind line is broken to the downside. The low here is now seriously under threat. You could be accumulating Bitcoin valuation. If you were 100% fiat with mild bias, with judicious shorts, if experienced enough on HVF setups, that's the position you should be in. Lovely rain chucking it down, and I've got the sliding door open, so I hope it isn't interfering too much with audio. But that is the situation. So Bitcoin is looking weak, and at the same time, the Dow Jones is looking weak. Unfortunately, while we search for inverse correlation, we are closer to finding correlation. What is the common denominator? Human emotion, pain, weariness, foreboding. When the control structure creates fear in the environment, trade wars, and the news narrative gets turned to various things, plus lots of attacks on cryptos, exchanges, legality, tax, regulations, all of these things start to climb in to the system, then the news flow towards these particular assets are undeniably negative, and it becomes an easier shorters market, and it's a difficult place for the buy-only crowd. How many early cryptos with no investment experience are being murdered right now? How many doubled up when it was going $18, $19 to $8,000, only to get smashed right down to $7,000. They will have taken, if they bought at 18 and 19, virtually a 60-65% haircut already, going on 70%. Look, you're probably after a sell-off like that, there's normally a reaction, and you are coming close to the low, so you get a little bit of a reaction. I am not favorable for bull positions at the moment. I think that there's a possibility this level will certainly be run. We've given targets in our premium area. So what are we seeing? Indices versus Bitcoin at the moment showing fear correlation. The season for selling is coming for equities. Sell in May and go away. Easter weekend, people go away. A lot more defensive positions from institutional type people. And then you get 1st of May, which follows after April. So that is not a good time. Summertime, everybody relaxes a little bit. Then it's doldrums for equities. And if they're overvalued and bloated, you can have a nasty little grind with regular little sell-offs that sees you lose and shed a certain amount of value. And we're seeing Bitcoin now looking in a similar way. So Bitcoin had, in effect, brought you potentially courtesy of the CME. I can't say that for sure. A lot of people want to, hey, I hate the control structure and what their games are, but we don't know. These things are self-feeding to some degree. All you know is that there was a volume of buying. This was a complete blow-off moment. And this, as I've said before, on a big enough time frame, is a massive shooting star. Essentially, you have a body candle that is currently here, green, and from when this started, let's just go from this point over here, it would be mildly green, and this is all one long wick. If you can visualize one candle, you've got a small little green body that is roughly between that red line and that point there, and a mega wick. That would probably be a thrice monthly chart. Nobody looks at those kind of charts, but that is what it represents, a blow-off moment. This was a blow-off moment, and you get a hangover. You had it in gold. You had it in silver. I had HVF's macro for 1300, calling an all-time new highs for gold when it was still at 964s, and it barely held above 1,000 for more than a few days. And people thought I was crazy. Oh, we're going Japan deflation. We surpassed 1,300, ran all the way up to 1,900. We overperformed, and we were bloated and have disappointed for a long, long time. So there is a correlation with this sell-off to gold. It can disappoint and grind out for an extended period. Go have a look at your gold charts. go have a look at your silver charts, which was just a more extreme version of it. Let me just show you the gold as a parting shot, and then that will be the end of this clip. By the way, our final live webinar on the 7 mistakes traders make and the 3 great gifts will be on April, and I've confused a few people and I apologize, crosswise with some of my own staff, will be April the 12th. We were planning a recording to be sent to those on the 29th. That is essentially this evening. But if you want the live, come, and that'll be me in person actually speaking to you. You can do it on the 12th. Otherwise, support at the Market Sniper. Get the recording if you need it before. There's an offer for you to engage and learn more about HVF. So where are we? I've drawn this grind line. I haven't looked at gold in ages. I've drawn a number of these levels before. Interesting when a chart is still complying to that. Note how we get selling at these levels typically in and around the 1360s. It's a key level of significance identified before. It was one we couldn't get back above when we had that grind line and we dipped lower. Now we're on the way back. Strong ascending lows being bought. So it's always a great time to buy along the strong ascending level, but it seems to be an unload point in and around 1360. What might happen though is before it can go up, it first does a dip through this grind line. This grind line is quite steep, the buying along the bottom. So you first might get that, and then you might advance, and then you might revisit to the key level of significance that was resistance for a long period before you can get support. So moving bullish, but the other thing you have to bear in mind is silver. Silver needs to move faster. Silver needs to move faster than gold until such point you aren't getting the ratio swing. So let's do that one as well. These can be supportive in a fear environment. If people are moving to cash, they might also buy an insurance against system failure. The anti-system that points to system failure is the precious metals, and unfortunately silver is not yet ready to move. It is underperforming on this weekly time frame. That said, it is squeezing like hell, and low volatility begets a highly expansive high volatility period. After this bottoming, my assumption would be biased to the bull side on a bullish breakout at some point, but it is yet to happen, and there could still be further drifts down and around before we get that push up. But you might find it a good time, if you're a long-term investor, to continue accumulating your silver. There may be rewards for you. Recognize all these steps to the downside. That was your inverted flat bottom. Now you're getting a far more symmetrical squeeze type HVF structure, which would be very, very interesting for our upside move after basing out. It needs to wind up to cross this resistance level. In other words, key levels of significance that we teach you on the way down need to be run on the way back up again. That's as much as I'm going to give you. You want to find out more, you got to come and pop over to the Market Sniper about how we trade, and we've given you a sneak preview of our take on Bitcoin, the Dow Jones, and also a little bit of a run for precious metals. So we're winding up potentially to get above this zone, which will then turn into support for any revisit move to this zone before potentially going higher. So it could slowly be working its way around precious metals. Good. Thank you for listening. And so 12th of April for live. Otherwise, support at the Market Sniper for the recording. I thought it was going to run at the time, and I just wanted everyone to know it's a recording. We don't like trying to fool people or anything like that. We're a high integrity premium area, so if we're not doing anything live, we tell you, and we were providing a bonus for those that were to attend, and when you send an email, if you do want the recording, you can ask for that, and it's on Mindset. It's an hour mini course. So that's it from me, Francis. Thank you very much. Remember to follow the Reset Sniper for my takes on the overall control structure big game and the quickening that is happening, and follow the Crypto Sniper if you're particularly interested in cryptos, and stay right here on the Market Sniper, although I'll push this one through crypto as well because of the BTC element, and follow Market Sniper if you're not already doing so. Thanks very much, and have a good week ahead.